Hey, welcome everyone to another Sky Community call. Today we have Rajiv from Viridian. As always, he'll be cover the weekly overview on the accessibility reward and how the markets have been answering. And then we will continue the conversation with Rune about the allocation system that we started last week. And hopefully we can dive into other topics if you guys are interested. Um, yeah, just to give you an update on what's coming next week, we'll have someone from Steakhouse to discuss the report that they released on the forum. And so yeah, if you guys have any questions about that, it's going to be a good opportunity. So we'll have another call on Wednesday at the same time. I don't know, Rooney, if you wanted to comment on that report before moving on with Rajiv, but yeah, it might be a good opportunity.
Oh, yeah. No, I think it's good.
Okay,
Let's go ahead.
perfect. Then let's jump with Rajiv and the state of the accessibility reward. Thanks, Rajiv.
Okay, hopefully everyone sees my screen. Um, do the usual
Yes.
short and sweet overview of the demand side, and I'm going to jump into the main trend of the week, which I'm sure most people are aware of. So here on the bottom right, Athena. And during the last week, which is this period from when we last spoke on Wednesday up until end of day yesterday, over the last 5 days, significant withdrawals to the tune of around 750 million USDS. So obviously major impact to our um, demand. I would point out they've not been withdrawing from the Biddle offering and assume that this is down to the increasing prices we've seen over crypto in the last week, making the delta neutral perp strategy more attractive. But if we take out the impact of Athena, it's actually a very different story over that 7 day period, where you see momentum, and what we've actually seen is strong ongoing momentum across the various different categories that we've sort of been highlighting over these last few weeks. So I'll call out a few of them and sort of show them in more detail. Yes, USDF pulls on curve. We've talked about the savings vault being built on top of SUSDS, so ongoing momentum with Turtle, more so with the USDC vault from Spark. We talked about that use case of idle funds tapping SUSDS for yield. So we see the ongoing momentum from Maple with that sort of use case. And we saw more inputs coming from the whales over this period. The week before, I'd highlighted how some of that more hot money had flown out. But over the last week, we saw some of that coming back. So overall, without the impact of Athena, um, it's been positive, but it doesn't fully mitigate for what is a huge withdrawal from what the biggest. I'm assuming they're still the biggest holder, but by far the biggest holder. And if we look at the overall impact here at the top on USDS, and we strip out the Sky savings rate or the savings contract, you'll also see that positive momentum during the week. So taking out the impact from Athena, we're seeing momentum from Aave and the USDS market on Aave, also on Spark, as well as an uptick with token rewards offering. Small, but still an uptick. And you see that in more detail here at the bottom left. We actually had a contrasting story from from Alexia, who withdrew during the week and reduced their positions. But a lot of inflows from that long tail of smaller holders, as represented in the other category, specifically for the Sky Farm in token rewards. So I think for the summary of the week really is strong momentum across, the big holding categories, and that's partially, but not fully, compensating for what was a very large Athena withdrawal. So I think those are the main highlights. I don't have much on the sort of wider market landscape, but um, yeah, I'll pause there.
Nice. Thank you, Rajiv. I don't see any questions regarding this.
I have one question. So with Athena, it's like they were withdrawing, and it seems likely to be related to the perp yield going up or potentially going up. But I think is there really no other outflow? In case there is, I think it would be useful to also take a look at anywhere else that had outflows and trying to paint a picture whether that can be also related to rates going up. Because I think in general, right, what we could expect is that if the market heats up and we start really seeing rates going up across the board, that's gonna that's gonna increase the opportunities for stars to deploy into higher rates, but also potentially gonna then result in the sky savings rate itself needing to be increased to be competitive. Which I'm sure that the risk teams and all that they're looking at that. But anyway, I would like to see any other outflows if there is anything.
Yeah, I actually had the same thought, Rune, in terms of wondering, um, is the rate too low? And we actually sort of we track the rate versus what Athena's paying via their contract, because there's a few different ways of capturing that. Um, but I didn't actually see any major outflows across sort of the big holding groups. It really was this sort of very large withdrawal from Athena with sort of momentum or at least stability across all the others. And I'm sort of flicking through them so that you can see for yourself. So
Yeah, and it's also the thing about this chart that's a little weird is that we're talking about the last week, but the chart shows what, 2 weeks? Yeah, 2 weeks. So
yeah,
we're
so sorry. Yeah, this shows the month. We can adjust it so it literally just shows the last week, but the period that we're analyzing is from the last 7 days, from May the 6th to May the 13th. So I mean, we'll correct that for next time. So we're literally just showing the last 7 days.
yeah, cool. Okay, but that yeah, that's great news. Bullish. And then one thing I want to note is that I know that actually the Athena team reached out to, I think, the Spark team and others, and like gave a lot of advance notice that they were going to do a major withdrawal. So I think that's a really good sign that like obviously SUSDS, USDS, and the PSMs and the ability to easily convert into USDC is just a very useful tool for projects like Athena and other stablecoins like them that are going to be coming in the future to tap into. So there's definitely no it's not like some like hostile intent or anything like that. It's just naturally this is what Athena is set up to do, because like their whole thing is that they are like higher risk, right? They're the holders of USD expect a bit higher risk, so they expect that when the rates call for it, there will be a lot of exposure to perps. You can also tell how that's also how the Sky protocol treats USD, right? It's like this higher return but slightly higher risk asset that needs some credit enhancement, and then it makes like once it's a little bit over collateralized, it fits really well into like a portion of the diversified USDS collateral portfolio. All right, cool. Then I think we can just move on to Q&A. Basically, I don't really have much. I mean, obviously, I could talk more about the allocation system, but I feel like we went over quite a lot of that last time. So I think I would rather just see like, okay, I see we have like 2 questions here. Yeah. So okay, let's just go through the questions.
Thank you, Rajiv, for the report.
Yes. Thanks a lot, Rajiv. Yeah, we'll see what happens and what big drama happens next week. It's funny that it seems to be like it pretty much cuts off at the Wednesday pretty well. That every Wednesday, that's when like the next big thing happens, and then now some new like, what do you call it? Like paradigm will happen, and then we'll see if things went up or down next week, next Wednesday. Okay, let me get to the questions, and yeah, I'll read out the questions first. So, the new pendle market for USDS, which provides SPK, matures on August 13. Does that mean SPK will TG on that date or before? That's the first question. And the answer is that that's not clear currently, or that's not announced. And yeah, but it's coming soon. It's coming very soon. And the second question is, will other stars launch this way too? And the answer is that's up to the individual stars. So possibly, possibly not. Right? This is really the founding teams of the stars. They build, their own token distribution strategies that kind of fit the particular culture and community and business model that they're going for. So I mean, I think it's a cool model. It's like it's like it's used quite a lot in ecosystems. So I think from that perspective, it's I would not be surprised to see other stars do the same thing. And of course, that also really depends on the success of Spark, because Spark is really going to set the standard for the coming stars, right? So all the other stars will look at whatever Spark did, and if it was a big success, they'll try to copy it as much as possible, is what I would expect to see happen. Okay. Next question. Is the allocation system supposed to be used only for buying assets that provide yield return, or are the stars also allowed to buy tokens with no yield paid on deposits, but expecting capital gains from price changes? Yeah, this is a great question. And so the answer to this turns out to be that so in a set, like, so in the short run, the answer is you can only buy buy assets that are like allocate into assets that are USD denominated. So let's say, like, so basically a star would not be able to deploy into ETH, for instance, directly, and just like use the allocation to buy a bunch of ETH and hold it in its conduit, or hold it in its allocation buffer or something like that. But what they can do is they can basically go, let's say Spark could go to Sparkland, take some ETH, which was, and that ETH is not considered risk capital, right? Like risk capital is like USDS sitting in the sub proxy specifically, right? If Spark takes a bunch of ETH, puts it into Sparkland, and then levers up on that ETH, basically borrowing out of Sparkland, then they're effectively doing the same thing, right? They're basically borrowing from themselves through the allocation system into getting a levered up ETH position. But the reason why the second example is fine and the first example is not fine is because with the second example, they are setting up their position with an automated liquidation mechanism. So it's really the liquidation that is everything, right? Because when you are risk managing a portfolio of this, and you're trying to protect against tail risks, so you're trying to guard against the worst case scenario where there could be risks to USDS stability. It's basically all about what do you do when there's like a big crash and a lot of uncertainty. And if you have a star just like holding a bunch of ETH on its balance sheet with no kind of reaction to the market tanking and that position potentially going underwater, that's just a lot more risky than if you have a on-chain Oracle powered automatic liquidation mechanism that's just ready to sell as soon as you hit kind of the stop loss, right? Like when you hit the liquidation ratio. And yeah, in the future, I think it should be possible to actually set ratios where there's like different things around, like strategies that are more passive, and where Star deliberately kind of accepts that you need a lot more risk capital to just hold ETH without an active liquidation mechanism. and you still need some kind of like properly articulated strategy for what do you do if it starts going underwater. Yeah, that's a long-winded answer, but I think this is actually a really exciting type of dynamic, because it's something I never really considered, that like it really matters if you're holding ETH, like if you're holding your ETH on a platform where it's like it's sort of hanging by a thread and it can be liquidated at any time. And that's actually way safer than you're just holding ETH and it's just sitting there and it's like a governance action to do something with it. Okay, so Etherscan, and now, yeah, another question. So Etherscan shows that only 2,032 holders of Sky. Just curious about how many voters, 80s or others, are now using the Sky to vote for the governance poll or executive vote. Seems that even those voters are not like to use Sky. Yeah, so actually currently, so when you're voting right now, you are actually, like, you can vote with Sky, especially if you seal, which is yeah, I mean, not advisable right now, because it's basically it's practically defunct in preparation for the migration to staking, right? And then very soon there'll be Sky staking will be available, and then we'll be voting through Sky and all that. But right now, the same system exists, and you can seal your Sky, and then you can vote with it. And then what happens is, when you vote with Sky as you've sealed, is that it basically, like, the seal system itself, so not you as a user, but the underlying system will basically convert its Sky to MKR in order to work with it, because the current governance system uses MKR as the voting token. And that's the thing that is migrating to Sky really soon, which then paves the way for this, like, standard, like everything running based on Sky, everything being set up the standard way, depending on the Sky token. And that also means Sky staking will be available, and that you will see a lot more. You will see the statistics reflecting a lot more MKR will have been migrated to Sky. All right, next question. Launching a Euro stablecoin would be a new dedicated star, or can it be included in Spark, for instance? Yeah, so this is cool. This is a question of multi-currency stablecoins beyond USD. And so this is going to be one of the last things that need to be really, like, developed in, I guess, the sort of early phase of highly impactful Sky primitives that are still under development. It's definitely several years out to enable the launching of new currency pegged stablecoins like Euro, CNY, and other popular currencies. I think probably the model will mirror the Pioneer Star model that's used for cross-chain expansion, meaning that it has to be a new star, and then that star gets a lot of, like, the upside in this new stable coin that it basically bootstraps. But the reason why that model works for the Pioneer stars as well, and the cross-chain expansion, and would also work for this, is because stars are very much designed to and encouraged to incubate other stars and hold the tokens of other stars. So Spark can effectively be almost, like very close to, like, the sole kind of, like, it's like the primary participant in actually launching a new stablecoin, even if they have to do it through, like, a dedicated Pioneer stablecoin, or whatever we'd call it, star. So they would even if they would have to create a new star in order to do it, they could still end up holding the majority of those tokens, and also so getting a lot of the upside, and participate in and be sort of a major player in making it happen. And yeah, one thing is really cool that enables this, that basically makes it very beneficial for one star to hold another star, is that basically the main cost there is to being a star is that all the stars have to pay the agent upkeep, which is 25 basis points of their market cap that they have to pay per year. to put it simply. It's slightly more complicated than that, but it's basically like a yearly upkeep that depends on their market cap that they have to pay. But if a star holds tokens of another star, then they actually get rebated. So whatever agent upkeep the other star pays, the holding star that holds tokens for that other star can then rebate a portion of their own agent upkeep. And so this way you sort of only pay agent upkeep on like the total I don't call it the total externally held market cap is the way to think of it. So there's like no downside. There's no like double payment of agent upkeeps for a star to hold other star tokens, and it can actually be really beneficial. Like if they hold enough star tokens, their own agent upkeep can be almost entirely eliminated. So because of how like the stars can very easily analyze and understand the data and the value proposition of other stars, because they're stars themselves, I think we should expect to see like a lot of cross-pollination and like stars holding other star tokens and basically farming each other's tokens. And that's going to create some really cool opportunities for like broader synergy hubs and collaborative networks between the stars. That I think is sort of, like it I guess it encourages a kind of behavior where, it makes sense for a star to be like, yeah, when we want to launch a new stablecoin, but let's do it as a new star, because it just is it's a very effective, it's a very nice approach to like sort of compartmentalize things. And instead of trying to make these huge bloated one size fits all organizations and then build up a bunch of politics, complicated processes and drama and all this stuff that happened the first time around with Maker, but also just generally seems to happen all over the place in crypto organizations and also just in every single real life mega corp, right? So it happens all over. And what's really cool about the stars is they can do so much, but effectively stay a very small core team. And then when they want to really expand beyond what that core team can handle, instead of like bloating up that core team and creating management layers and so on, they can just invest in another star and set up get another like lean founding team with their own token and their own incentives. But then the kind of the star that helps incubate it really can provide a lot of the, can actually hold a lot of the tokens, right, in order to still get a lot or even most of the upside. And one thing I guess that is interesting to then comment on this topic is that what happens if a star just wants to own 100% of another star? And the answer is that basically there's a requirement that a star must have some amount of its tokens in public circulation. Or rather, that requirement doesn't currently exist, but it's likely going to be proposed and implemented, because it's a bit of a loophole, basically, if you can just fully own another star, and it eliminates the concept of pioneer star and so on, if you can take that approach. And the thing is also just that what's even worse is if you have one star owning 100% of another star. That's actually not necessarily that bad. But what would be really bad is if you had an external entity own 100% of a star, right? So you have a single monolithic like token holder base for a star. And the reason for that is just then what would happen is all governance would sort of naturally happen inside that singular holding entity. And any governance that actually happens in the star's artifact and happens in public would be more like just like trying to mirror whatever is like fully decided and the actual like the incentives that exist for that singular holder. So basically, if Sky enforces like a minimum amount of fully public circulation of the star token, that's going to actually create some good layers of like protective mechanisms, basically, for the star. That's going to make it less likely to become misaligned and just increases the scalability of Sky as a whole. Then what that number should be at is debatable, but I think like a good rule of thumb would be 10%. That's probably what will be proposed at first, but we'll see. It's not yet proposed or implemented. Okay, so that was a lot about launching a new star and new stablecoins and all that. Okay, So given the reports of the recent push to migrate SDAI to SUSDS, causing losses to the DAO and new competitors launching competitive immutable products very soon, does the DAO still intend to taper the DSR as fast as it currently is? If so, what is the time span for this tapering planned to be? Yeah. It's funny because I feel like this concern or narrative or whatever has been brought up. Yeah, I mean, all the way, I think for the last 5 years or so, right? Because it goes all the way back to there being USDC in the collateral and so on. Like, I think ultimately it's completely, there's absolutely, there's no demand, there's no sign that there is any kind of interest in actual, what I call purely decentralized stablecoins, right? Like actual, these like ideologically driven systems that unfortunately can't even become purely decentralized. So that's still a misnomer. Like it's like they're like maximally purely or something like that, maximally near purely decentralized stablecoins. Unfortunately, they always have to rely on centralized oracles. So they like, sadly, you can't really make this. But I think even if you could, like, you can see things like Rye that basically shut down, right? Like they're, yeah, and there's not. I mean, I think LUSD is the best one, but like it's just it's. I mean, it's targeting a different user base, and it's definitely completely. It doesn't. Yeah, it has nothing to do with outflows from DAI. I'm convinced. I think the reason why DAI is still really popular is because of its network effect and its broad adoption, right? And that should be supported. SDAI also has some broader adoption, but it's just kind of, I think, confusing and it sort of dilutes the attention to have multiple savings rates, basically. And then, of course, there's the whole resilience question, right? Of trying to avoid any kind of risk to the RWA collateral and sort of any kind of threat to the collateral of the system. And like the problem is if something like happen, right, and you have governments getting upset about what's happening with the stable coin, and then while so they don't like what a stablecoin is used for, but they are participating in protecting some of its collateral. That's of course the thing that is really important to avoid, right? And everybody's top priority and top concern related to DAI is exactly that DAI should be maintained and its network effect should continue, and the people who are using DAI now, they should be able to continue to use it without any kind of disruption, right? And removing the savings rate component or just reducing it initially, I think really helps with that. Like it really helps kind of prevent DAI and SDAI from like grabbing more attention or growing beyond just the current user base that are using it, right, and are happy to use it, and that should be supported in using it for as much as possible. All right, multi-part question regarding Sky utilization. What is the token received when the Sky Chief is live? Is it an IOU or something new? I actually can't answer that, so I don't know. I think there's some new upgrade. This is really funny. This is such a like Maker/Sky thing that apparently the new chief that we're upgrading to now is like an upgrade of the old chief, but it's I think it's like 3 or 4 years old or something. So it's an upgrade that happened like so many years back, and then now finally after all these years, it's getting actually implemented. But yeah, so I think there's something different about it, but I don't know what. And I suspect either there is already a forum post explaining this, or there will be in the forum, and if not, then a later point with like once all the launches and all the shipping that's happening now, once that starts coming down, there will be much more energy and effort put into just producing that like complete end-to-end documentation about this kind of stuff. Okay, what is the ETA for? Wait, I think I can look at this. The question just disappeared, but okay, here it is. So this is the last part. All right, back to the element. So what is ETA for basically staking, LS Sky activation for rewards. So basically Sky staking, what's the ETA for Sky staking, and how many front ends will support Sky staking on day one for those who value privacy. So the ETA for Sky staking, I think, is a matter of weeks. I think it's coming very shortly. And as for which front ends that value privacy that support it, I can't answer that because I don't know what. I mean, I'm guessing this means VPNs maybe, but I don't know which ones will support it that will integrate and support VPNs. But I would not see. I don't know if DeFi Saver supports VPN, but I think that to me is like a good candidate for one that I would expect might support sky staking on day one. Yeah, I mean, there's DeFi Saver, there is Summerfy, Spark, and Skyler Money, and they all have different policies and approaches to how they screen users and IPs and so on. So I was just trying out those different ones and basically asking them what they plan to do. All right. Well, that was a lot of good questions. Yeah, I mean, to be honest, I think we should just cut it short today. This is a good, productive 35 minutes, I think, with some good questions. And as Juan said, next week we'll finally go back to having a little bit more of an exciting program with some more content. So I'm looking forward to that. And then, of course, we'll keep going every week.
Yes, thank you, Rune, for being with us. As we were saying, next week we'll have the Stakehouse team explaining the report a little bit more in depth. So I think there will be a lot of things to cover. So bring your questions as always, and thanks everyone for being here. Have a nice one.